Hi everyone, this is Margaret Moran with GuruFocus. As many of you already know, this past weekend was Berkshire Hathaway's annual meeting of shareholders, which for the first time ever was held exclusively online. Couldn't go to Omaha this year, unfortunately. So today we're going to be taking a look at GuruFocus's top 5 takeaways from the meeting. Number 1, bet on America. So this is one of the first things that Buffett talked about in the meeting, and he's always really believed in the American tailwinds, and that even if stocks go down in the short term, the U.S. stock market will eventually prevail and bring returns to shareholders. Never bet against America. That is as true today as it was in 1789 during the Civil War and in the depths of the Depression, Buffett said. And I don't know whether today is a great day to buy stocks. I know it will work out over 20 or 30 years. So yeah, Buffett's looking at things with a long-term horizon here. Sure, the stock market may go down now, but eventually things will get better again. Number 2, be cautious. So although Buffett seemed to be of the opinion that now would be a good time to invest, and he even mentioned Berkshire Hathaway being willing to invest if the right opportunity came along, he also seemed to take a tone of caution, saying, "We don't know what happens when you voluntarily shut down large parts of your economy," referring to how the U.S. kind of, instead of letting the train crash like what happened in 2008, he compared the lockdowns to just taking the train off the tracks entirely. And he even said, this is quite an experiment. So we're really dealing with a huge unknown here. When talking about Berkshire's cash position, Buffett said, "It isn't that huge when I look at worst case possibilities. I would say that there are things that I think are quite impossible, quite improbable, and I hope they won't happen, but that doesn't mean they won't happen." 3, improbable is still possible. So no matter how unlikely something may seem, no matter what black swan event no one ever saw coming in a million years, even the most unlikely possibility can still happen. And Buffett talked about this a lot when explaining why he decided to sell out of his holdings in the 4 major U.S. airlines. He said, "The world has changed for the airlines, and I don't know how it's changed. There are things on the lower levels of probabilities that happen sometimes, and it happened to the airlines." He emphasized that we were not disappointed at all in the businesses that were being run and the management. However, one of these improbable but still possible events still happened to the airlines, and so causing Buffett to believe that there were far more attractive opportunities elsewhere in more knowable sectors. 4, have faith in banks. I think overall the banking system is not going to be the problem. They were reserve building in the first quarter, and they may need to build more reserves, but they are not a primary worry of mine. We own a lot of bank stocks. And so as opposed to 2008, when the banks were a large part of the financial crisis, now they're kind of essential to fixing it. And so Buffett said, banks need regulation. They benefit from the FDIC, but part of having the government standing behind your deposits is to behave well. So that seems to imply that the banks are definitely not as likely now to have issues as they were in the past, because the FDIC is, and also the 2008 financial crisis, they've learned from their mistakes. When talking about the Fed's actions, Buffett said the Federal Reserve did the right thing in terms of unlimited quantitative easing when they did it, and they did it very promptly. So even though we don't really know what the effects of unlimited quantitative easing are going to be, there definitely still needed to be something done in order to keep businesses from going under en masse. And 5, invest only in what you understand. again, going back to the airlines, Buffett said the main reason he sold them was because the sector had kind of become unpredictable. You should do something that you understand yourself. If you don't understand it yourself, you're going to be affected by the next person you talk to. And I just think you're dealing with a huge unknown. The degree to which it's disturbed the world and changed habits and endangered businesses in the last couple of months indicates that you better not be too sure of yourself about what it'll do in the next 6 months or year. So yeah, things have really been shaken up in the short term, so now it's even more important for investors to invest only in what they know. And if you're not sure what's going to happen, if you don't even have a good guess or a good prediction, it's probably best to allocate your capital elsewhere. Right, and those were GuruFocus's top 5 takeaways from the meeting. As always, we look forward to your comments. Let us know what you thought about the meeting. What were your top takeaways? Thanks for watching.